Hey, what's up? Hello. It's CoinDesk TV. You're watching The Hash. Christy Harkin's wearing a CoinDesk t-shirt right now. Christy, wow, amazing. That's good stuff. All right, I'm Zach Stewart. There's Christy over there. We got Sandali Handagama joining us as well. Lots to get to, as always. I don't know which way is which. Sandali, you have the first story. I do know that. Please take it away.
Yes, I do. Thank you, Zach. The world's largest asset manager, BlackRock, is officially exploring how to serve clients with digital currencies. In a letter to shareholders, the CEO of BlackRock, Larry Fink, said the motivation behind the move was an increasing interest from clients around digital currencies. Fink seems to have changed his stance on crypto quite drastically. In July last year, he said in an interview that he's not seeing much demand for digital assets. But in Thursday's letter, he said that the Russia-Ukraine conflict is pushing and will push countries to reassess currency dependencies and look to other payment options that can bring down the costs of cross-border transactions. CoinDesk reported last month that the asset manager may be planning to offer crypto trading to its clients through Aladdin, BlackRock's integrated investment management platform. This is quite bullish compared to what we have seen from Fink before. So, Zach, what do you think about this letter, and what do you think made him change his mind?
I just think he read that great Ian Allison piece on CoinDesk.com, and he was like, yeah, you're right. We are doing that. Shout out to Ian Allison for getting that scoop seemingly confirmed with this one. It is interesting to see these giant asset managers slowly embrace the world of crypto assets. And again, I think this is something we've talked about time and time again on the show. It does seem to be client driven, right? Clients are saying, hey, this Bitcoin thing keeps going up. Can I get it in my BlackRock account? And I think people are sort of like waking up to that reality and saying, okay, sure, other people are doing it. We better follow suit, or else we're going to lose these clients to other institutions that we're competing with. And so BlackRock, I think, becomes the big dog here, stepping in and potentially offering the service through the Aladdin trading platform, which is quite interesting. Details as to what this will look like, I think, the devil is in the details. What this will ultimately look like as it relates to clients using these services, based on my understanding of today's thing, is still to be hashed out. But Sandali, correct me if I'm wrong there. But it's going to be interesting to see which path this Wall Street giant ends up taking relative to some of the others. We'll see. I'll throw it back to you, Sandali, for your thoughts, and correct me if I'm wrong on whether or not the details are in this one.
No, you're definitely right. There's very little details. This is just we are exploring, like so many have said before, and how soon we're going to see this rollout of maybe with Aladdin, we don't know. But it's important that he has acknowledged this, and this is the kind of official statement and position from BlackRock right now. So that's a big move, and it's nice to see it publicly acknowledged. I don't know if, Christy, you have any thoughts on this, on what to expect.
I think the interesting thing is, as Zach pointed out, it's probably investor driven. And we've seen, I think, that happen a lot lately where, people are saying, about this Bitcoin thing, maybe we should be getting in on it. And I love what George Kaludis wrote, one of our research analysts wrote in his Crypto Long and Short newsletter on the heels of Ian Allison's reporting, where he said maybe crypto's total market cap settling somewhere between 1.5 trillion and 3 trillion for the last year or so changed a few minds at BlackRock. Maybe it was jump trading finally diving into crypto that changed their minds. Maybe enough Zoomers sat down with their high net worth parents at the dinner table to talk about cryptocurrencies until there was some sort of a tipping point. Whatever the catalyst, the news is big. And I think that's where it's all coming from. And I think we're going to see more and more of these things happen. Zach?
And it is kind of this incremental progress thing, right? I mean, we noted in the story last month that, BlackRock seems to be rather bullish on MicroStrategy as a Bitcoin proxy stock, owning something like 16.3% of MicroStrategy shares at that time. So for them to say, okay, we did this first step, tried it out, we dipped our toe in the water, now we're going to be exploring this in more ways, is interesting. And I think it does speak to what we've seen sort of time and time again, I think, in the Wall Street institutionalization of Bitcoin narrative, right? It's like we take these little adventures, these little steps. Maybe it's working with Galaxy Digital on something. Maybe it's buying a bunch of MicroStrategy shares. Maybe it's XYZ. And then before you know it, there's this other slate of offerings that these banks are rolling out to their clients. Typically, they're high-end clients. So it's interesting to see, again, this just weird banking embrace of Bitcoin, and whatever the reasoning is, whatever the rationale, hey, cross-border payments, remittances, money in times of conflict, those are things that are cited in here. I think honestly, probably that market cap thing that, that George had mentioned may indeed be, the elephant in the room. Hey, it's getting too big to ignore.
Money speaks.
Better figure out how to serve this. So yeah, money speaks, especially on Wall Street, and BlackRock seems to be the latest to continue its adventure on that front. But Sonali, I'm going to toss it to you for final thoughts.
Yeah, I loved George's newsletter on this topic, and he mentioned that the little demand from clients was probably because of who the clients are. These are pension funds, endowments, and other types of what he called conservative capital. So it might have taken some time for them to get on board with something like crypto, but it's really cool to see that this demand, like you said, is coming from their clients, which are these individuals and organizations. So sentiment towards crypto is changing, and we're seeing that right here. Zach, back to you. Oh, I think Christy has the next story.
Right to Christy, who has our next story on cryptojacking. What is up?
Cryptojacking. Well, as I've been beating this drum for most of the week, it is mining week here on CoinDesk, and we've got a really great bunch of articles, features, data, stories, just really cool mining stories. And one of them that came out today is about cryptojacking. And if you don't know what cryptojacking is, this is when so it's a kind of cyber attack, usually through the form of malware, that can hijack your computer's resources and use them to mine cryptocurrencies. The most popular cryptocurrency mined this way is typically Monero. Monero still uses GPU mining. I believe it's really, or it's a very low energy intensive. You cannot cryptojack and get Bitcoin. That is just not happening because people's computers can't do that, but they can mine Monero. So it's like a little parasite that sort of locks onto your computer's computing power, your energy source, and it quietly mines coins in the background and sends those coins to somebody else's, the attacker's wallet. Now, unlike a lot of other malware, it's not going to shut your computer down. You might not even notice it's there. In fact, like most parasites, you don't want to disrupt the host. You don't want the host to know that you're there and get rid of you. So it's very, very subtle. Like I say, it's not going to break your computer. You might notice your computer is working a little slower than usual because some of its energy is being siphoned off to mine these cryptocurrencies, as I say, typically Monero. And it's not just a problem for individual computers, it's also a problem for cloud miners, because you can infect an entire system this way. And wow, that's a lot of energy to put toward cryptojacking. The thing is also that because it infects individual computers, there's not really much that these cloud service providers can do about preventing it. They can't get into your computer and go, hey, no, but it is trying to educate people that cryptojacking is a thing and that you should always, as always, be keeping all of your networks up to date, run all of your malware prevention tools, your defenders on your computers, always have your devices updated, because this, again, it changes all the time and it's hard to catch these unless you are running software that is designed to do those things. So big, sort of a lot of information there, but anybody got something they want to say about it? Anyone?
I'll take a hack at it. I mean, the numbers stood out to me in this piece. Something like, cryptojacking's malware on the rise in 2021 by about 20%. But the one that stood out to me, according to, I guess, a Google Cloud cybersecurity report, was that 86% of comprised cloud instances were used for crypto mining. So I guess it makes sense, right? It's a thing with immediate monetary benefit, right? You put in this malware and you're able to send that sweet, sweet XMR to some external address. It makes sense that like the financial benefit being so closely wed to the malware instance makes sense that it would be eating up a lion's share of what we're seeing in the market these days as it relates to malware on the internet. So I was just struck by that. I mean, it feels like these numbers are always growing, I will say. I don't know, maybe that's true, or maybe that's just the vibe. But the fact that they do seem to be growing at a relatively significant clip, especially recently, I don't know, feels like hackers being hackers and finding ways to make money off of infecting people's computers with various viruses. So, yeah, I don't know. Is this growing? Is this like, I'm just going to kick it back to you, Christy. I mean, I feel like, is this atypically large in terms of growth for for how far cryptojacking is spreading this year?
It's been around a long time. I mean, I've been reading about cryptojacking for years. And I think that, well, what's also interesting about it is that it's not just used for nefarious purposes. Cryptojacking itself is, I mean, if you're doing it without the consent of the computer that you're hijacking, then yeah, that's a crime. That's a cyber crime. But there are actually websites that ask, hey, can we cryptojack your computer? Can we mine stuff? Can we use some of your resources to mine cryptocurrencies for charity? I think UNICEF did that like about 4 years ago. You can actually sign up and say, yeah, I'm willing to donate a small portion of my computer's power toward creating cryptocurrencies for a charitable site. I think, though, that, obviously people are trying to find smart ways, subtle ways of getting cryptocurrencies whenever they want them. They don't have to negotiate and say, I'm going to shut down your computer unless you yada, yada. It's a lot easier to do it in a subtle way and an untraceable way. I mean, heck, they're mining Monero, so that's a privacy coin that really is hard to track. So yeah, it's a pretty ingenious way of doing it. So you really have to stay on top of it. Sandali, do you have any thoughts on this?
Yeah, I mean, I read this and I was like, oh no, here's another scary thing that I have to worry about now. But no, it was such a great report and so well laid out by our colleague Elisa. And for me, what stood out was there was a mention that a switch to proof of stake mining could help curb the growth of cryptojacking and would make this type of attack less profitable. And I was wondering if we could maybe go into that a little bit, because proof of stake is the hot topic now. Is it going to change the climate argument around cryptocurrency and now with malware? So, Christy, I was wondering if you had any ideas on how this could be a potential solution.
Well, the thing with cryptojacking is they are using the energy from your computer for proof of work mining. It really only works with proof of work mining, because that's the whole point of proof of work, is that you exchange energy for cryptocurrencies. It's a way of turning energy into cryptocurrencies. You need to have that little piece of energy to prove that you have done the work in order to qualify, if you like, for the block reward. Monero is a proof of work cryptocurrency, just like Bitcoin is. And Ethereum is at the moment. But switching to proof of stake, they would have to invent a whole new kind of attack system to get into the validators. It doesn't work that way. It's not in any validators don't run on energy. It's staking. So I'm sure there will be something that will rob validators one day, but not in this way, not in crypto, not by cryptojacking. So our last topic. Oh my goodness, are we doing sports again, Zach?
I think we're going, it's either going to be the Metaverse Minute or the Sports Desk.
Sports Desk.
Yes. Never gets old. Never gets old. Love it so much. Thank you so much. All right. Anyway, this is a bit of both. This is both Sports Desk and Metaverse Minute. So shout out to Jensen Assey, who's not here with us today, but it's a combo deal. This is interesting because there's two big brands here. We got the Liverpool FC Football Club, a Premier League staple, And we have Sotheby's, a really old auction house who's been doing a lot of Web3 NFT stuff in the past year. The one that stands out to me actually is not the football club part, but the Sotheby's part. We know Sotheby's has done these really high profile auctions of blue chip NFT projects, but now they're sort of expanding their NFT work to incorporate entertainment, music, and sports projects in partnerships with some big legacy brands. It's called the Sotheby's Metaverse, and it's going to be interesting to see what it takes shape as a marketplace player in the ever expanding world of NFTs. So that to me is what stands out on this one. More Sotheby's, less football, but it is what it is. I'm going to toss this straight to Sonali for her thoughts on this NFT news.
Yeah, Zach, I totally agree with you. That's what stood out to me too. I mean, Sotheby's is this kind of exclusive, old institution that, focuses on all these kind of, I would say, a little bit elite things like fine art, jewelry, and watches. Going into NFTs in this way, it kind of seems a little bit to me like they're democratizing some of these more exclusive worlds with their push to go into the metaverse. One reason I say that is this particular collection, the starting bids are quite low. Usually Sotheby's sports collectibles go for like thousands of dollars. They start bidding at like $3,000 or more, whereas these start, even the exclusive ones, the limited edition ones are $100 a piece, I think. And then there's a second bunch going for $75 a piece. So that stood out to me as well. It's definitely a big push I see to promote Sotheby's metaverse presence, and both sales are going to take place there. So it's interesting. I don't know like what they're going for, but there's a lot of money to be made. Obviously, the sports. I think Sotheby's NFT sales last year was like around $100 million. So definitely a big play to get into more of the NFT space. I don't know, Christy, what do you think? That was my jumbled way of saying.
I was actually just about to say that, yeah, I mean, Sotheby's does have a history of sports collectibles. It's not like they're only, auctioning off fine art in China and stuff. They have a pretty wide array of, real life sneakers and other things and baseball cards or whatever. So this fits in. It does actually fit in. I think it's just the metaverse version of what they are still doing in real life. I think that they're also just hopping on the trend that everyone else is. I mean, we talked last week or earlier this week about HSBC and their little plot in the metaverse as well, to have an esports stadium. I think that companies know where the trends are going and they're going with it. I remember back in the day, what am I thinking? I'm thinking it's like 1995, poring over the sports collectible magazines that you could get and see if you had any of those cards that were worth a whole bunch. And my husband found a couple, which was kind of funny, like, oh, this thing I've been hanging on to. And people, I think, are going to be pouring through online versions of that and then looking through their wallets and seeing, I wonder what this $70 collectible that I bought back in 2021 is now worth. And it might be, an investment. It might just be something fun that they have that they can post and look at on their own and just feel that they are part of something, supporting their tribe, as we all are very tribal in sports. And yeah, it's just the next thing, I think, for Sotheby's.
That is a great callback to the Beckett magazine, and Beckett magazine should do a Web3 rebrand and become like an NFT blockchain explorer. Beckett, get at us.
Beckett,
let's
get
do
there.
This thing.
Yeah,
get there. Let's see what happens. Yeah, I feel like the Sotheby's marketplace is sort of like the fancy mall in town, right? It's sort of the high end mall, right? You go in the fancy shops. There's plenty of marketplaces out there where you can buy sports NFTs at this point in time. But Sotheby's is saying, hey, we can be a little bit of the high end option and get in on this action. And, I think we've seen one of on Tezos has certainly courted, both sports and music and celebrity. It'd be interesting to see kind of what that next experiment is with Sotheby's, whether they stay with some of these icons of sport or if they go with the music side or the entertainment side. It's going to be interesting to see what other projects end up populating this platform, because you know what? Sotheby's still has that brand cachet. So it's gonna be interesting to see which projects they get to work with. Sonali, I'm throwing it to you for the last thoughts on this Metaverse Minute. What do you got?
I just think like this is another, yes, this is where the trends are going, but this is also where the money is going. Just like BlackRock suddenly realized, we better get in on this. It's the same thing here. There's obviously a lot of money to be made. And I know that the crypto OGs kind of came into this space to change the world and kind of rally around this philosophy, but it's now taking on a new form, and it's definitely exciting to see, and all the different ways it's kind of moving forward. That's my spiel on that. But
I like
Zach,
it. That was like, yeah. What's the word? Co-option? Co-op? What is the word, Christy? What is the word for co-opt? Like co-option? Co-op?
Cooperation?
Co-op.
Not cooperation. Crypto being co-opted by the big brands. Anyway, there is interesting to watch that.
I don't know that there's
it's also interesting to watch crypto fight back. Yeah,
the co-opting of.
You know,
there we go.
You know lots of good words, so I thought you'd have. Co-opting of, we'll take it, put it on the board. Ding.
Yeah.
All right, that's it for the hash today. We hope you enjoyed it. We had me, Zach. We had Christy Harkin. We had Sonali Hanagama. We talked about some things. We'll do it again tomorrow. We hope you're having a great day, and we'll talk to you soon. All right, bye.